This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, November 13th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals Studio. Let's do our week in preview. Last week we had a lot of volatility that I think we should address, and something happened on Friday that many traders found very interesting. Gold was trading at approximately $1287, $1288 when suddenly a massive sale of paper gold came into the market and pushed it all the way down $11 in approximately 2 minutes. Now, many people found this very unusual because typically you don't see a market order of that size thrown on the market, because anybody that wishes to get out of that much gold would do it in a more systematic fashion. And sure enough, when the market pulled back, it did pull back quickly. But the interesting thing about what happened on Friday was, even with this massive sell, gold didn't break below key support, right around the 1272 number. So a lot of people looked today and said, when that type of selling comes into the market, it wouldn't be unusual for key areas of support to be broken. But the market was able to absorb all of that selling, and lo and behold, we ended up being up almost $4 today, closing right around 1278. Now it's interesting, over the last 2 or 3 weeks, we've seen a basing period in both gold and silver, as gold is traded between 1270 and 1300, and silver is traded between 1670 and 1725. Now the interesting thing about that is, typically when it trades in a very tight range, it doesn't do it one day up, one day down, one day up, one day down. But that's exactly what we're experiencing. But the positive thing about what took place on Friday was, I think that sell will actually encourage people that have been sitting on the sidelines to potentially get into the market, because if that amount of selling can't knock the price of gold below support, it shows you how strong support actually is. So that 1268, 1272 number looks like it's going to hold strong and may be a classic base from which this market could inevitably race. So if you look at silver right now, silver is pulled back. We've traded down into the 1670s, and we've shot back up into the 1720, 1725 area, very similar to what's happened in gold. Now, what we're hearing is that there's strong industrial buying in the silver market in that 1650 to 1675 area. And this industrial buying is the type of buying that provides classic support, because these are buyers that are buying silver not to invest in, but to actually use. And when they buy this silver, they take it off the market and utilize it in many different products that are being created. And if you look at the overall growth throughout the world, the economy is starting to pick up. Now, interestingly enough, one of the other key factors that you need to look at when you're looking at the precious metals, it's what's happening in the U.S. stock market. And everybody knows that the U.S. stock market continues to make higher highs. But there's an interesting saying that trees can only grow so high. And what I mean by that is that eventually a market will put in a peak. And what we're looking at right now is very high valuations. Last week in the video, we talked a little bit about the valuation of the U.S. stock market in comparison to GDP. We're currently at 139% of GDP. Now, the highest level we've ever seen is 145% of GDP, and that took place back in 2000, right before the tech wreck. So if the stock market is putting in a high, and if interest rates are potentially going to go higher, it would make sense that you would start to see rotation. And based on what's happening in the marketplace right now with the new tax laws that potentially are going to be put into place, many people are looking at them and saying, wait a second, they're not going to be only positive. There can be some negative there also, because there's going to be new rules as far as interest write-offs are concerned, as far as major corporations. And if you look at what's happened over the last 2 years, major corporations have been borrowing money to buy back stock, which has helped push the stock market higher and higher. So if we're putting in a potential peak in the stock market, and if interest rates are going to go higher, it wouldn't be unusual to see a little bit of rotation into precious metals. And after last week's assault on gold, and the fact that it held strong at that 1272 support level, now may be one of the better times to take a look at buying some gold, taking delivery of it, putting in your portfolio, and this will help diversify. There's a theory called modern portfolio theory, and it's based on the fact that you need to have a non-correlated asset in your portfolio, and gold is exactly that. It is one of the greatest buffers as far as volatility is concerned, and somewhere between 3 to 8% is probably one of the best blends that you could own. But what you should do if you're interested in precious metals is give us a call so we can talk to you about how precious metals can fit into your portfolio and help you meet your goals. Give us a call today. Thank you.